I believe there's a high chance that ARK Invest's space ETF, ARKX, will invest in this suborbital drone stock, EHang, ticker EH. In this video, I'm analyzing the company that makes these air taxis. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things EHang, ticker EH. This stock is far and away my most futuristic holding. Full disclosure, I do own some shares of this company. They're in the business of delivery drones, passenger drones like air taxis, aerial media drones, and even firefighting and ambulance drones. And trust me, they're a lot further ahead than you might think. Give me the format. We'll take a quick look at the overall business, what they do, and why I like them better than other drone plays out there. I'll also summarize their innovative progress from 2020 to 2021, then a look at their juicy financials and a potential valuation, and finally the risky risks involved with this investment. Before we jump into this, the Patreon and Discord is now open for the month of February, and on February 7th, the prices for both tiers will be increasing. So if you get in before February 7th, you will be locked in at that price in perpetuity, and the price change won't affect you. We simply have too many new members joining the community right now, and that's a great problem to have, but we have to figure out a way to keep the chat quality high and the culture strong as we continue to grow. So if you want to join the community to become a long-term independent investor and not just follow my alerts, go ahead and click that link below. All right, let's get started with the overview of the business and why I like them better than others. Let me preface this by saying that EHang is going after a $1.5 trillion total addressable market by 2040. More on this later. Their goal of the company is to enable safe, eco-friendly, autonomous air mobility for everyone. Their business is broken into three main segments, the first of which is of course air mobility, and this includes passenger transportation like air taxis or drone tourism, and logistics like delivering packages, offshore delivery, even organ transplants, and emergency medical support. Then there's the smart city management, which is the other part of their business. This includes firefighting drones, disaster relief help, and emergency response. And finally, the third part is aerial media. This is like lining up all the drones in the sky to make fancy light shows. I'm a big fan of their revenue diversification here. They're not just an aerial media company or a passenger drone company. They have a hand in all these different pots, and this is not a pre-revenue company. They're producing these drones on a massive scale. Let's put the spotlight on their logistics drones first because that's the most immediate addressable market for them. The UAM, or Urban Air Mobility Global Logistics market alone could reach $46 billion by 2023, an estimated CAGR or compound annual growth rate of 740%. That is absolutely nuts. With China projected to be the largest regional market in the world in 2023, making up 45% of the market. And yes, now would probably be a good time to clarify that they are a Chinese company. However, they've already crossed borders into Europe, Korea, and many other places, including North America. And I would argue that being a Chinese company gives them a huge competitive advantage, especially because they are a drone company. There's going to be huge amounts of regulation, permits, and certificates necessary for the drone and passenger drone industry coming in the future. And because the Chinese government has shown support for the drone industry, they're going to be a lot more efficient at passing these regulations than the US government likely will. And this is why I like EHang better than other air mobility plays, and I'll back this up with an example later in the video. This is not political at all, it's just an objective view as an investor. But back to the business. Drone delivery with EHang can save 40 to 60% on delivery time on average, and once their network is at scale, delivery is expected to reduce costs by 50%. And EHang is not just disrupting last mile truck delivery, they'll be delivering to nearby islands, offshore rigs, and much more. So to visualize all of these different drones, here is a photo of their drone suite, and the EHang 216 logistics drone actually isn't here, it's replaced by the V100 in this photo, but you'll get the idea and you'll see that drone later. To quickly readdress their TAM, in the longer term, Morgan Stanley estimates that the global UAM urban air mobility market will reach $1.5 trillion by 2040, with China showing the potential to represent $431 billion of that $1.5 trillion pie. And here's a growth chart from Morgan Stanley where you can see the $1.5 trillion to the top right. Now remember this graph because we're going to use it to find a valuation. All right, now we're going to look at some news, some big developments and stories from the beginning of 2020 all the way till now. This is going to be like going through a time machine with me. So we have about 5 or 6 articles I want to speed through. You ready? July 30th, EHang is set to build a new Autonomous Aerial Vehicle or AAV production facility in Yunfu City in Guangdong with a planned initial annual capacity of 600 units. And pay attention, in this deal, they receive a $6 million investment by the local government. The founder and CEO of EHang said this expansion was due to increasing market demands and commercialization of AAVs in China. August 14th, EHang announces that their passenger drone will soon take flight in Austria. They have a strategic partnership with FAAC and Linz AG, their local players in Austrian urban public transportation. Together, they plan to turn Linz into a UAM pilot city, or Urban Air Mobility Pilot City. August 21st, and this is all in 2020 by the way, EHang announces they would be joining Ambular, an international project to develop a flying ambulance for medical emergency use. They'll mainly contribute hardware to this project, but as proof of concept, EHang has helped transport medical supplies and personnel during the outbreak in China. November 12th. EHang is the first autonomous air taxi to be flown in Korea over a densely populated downtown area, and they obtained a Special Certificate of Airworthiness or SAC, the first SAC ever issued to a passenger-grade AAV, which again is Autonomous Aerial Vehicle. The EHang drone was subsequently purchased by the Seoul government and became the first of its kind to be officially registered. 2 weeks later, EHang completed maiden flights in 2 more Korean locations, and the acting mayor of Seoul remains bullish on air taxis. Alright, just a few more left. The next one is the example I promised of how being a Chinese company working in an industry that is supported by the Chinese government can be a competitive advantage. November 30th, they say, hey, we need to speed up the standards formulation for UAM. Boom! December 29th, literally 1 month later, China's first national standard for express delivery. It's a massively synergistic deal between EHang, JD.com, and ZTO. JD.com is a Chinese e-commerce giant who did $82 billion in sales in 2019, and ZTO Express is one of the world's largest delivery services who shipped over 10 billion parcels in 2019. So just 1 month after pushing the agenda for urban air mobility standards, they have a deal in place, and EHang is now the go-to delivery drone service provider for ZTO and JD.com. Alright, now we're in the new year, January 21st, 2021. After 10,000 incident-free flights, EHang joins the EU's AMU-led or AMU-LED project, and this is huge in my opinion. Alongside other prominent companies and institutions, throughout 2022, EHang will perform trial operations of their flagship 2-seat passenger-grade AAV in Spain, the UK, and the Netherlands. The goal here is to showcase air mobility services on a grand scale and demonstrate their safety and efficiency. This is by far one of the most bullish points in my opinion because it tells me that right now, if we look at the graph of innovation that shows market share and the rate of adoption, if they have to launch this massive program to say, hey, look, it's not that dangerous and it's really quite great, well, that indicates to me that right now we are in somewhere between here and here. And from what I've read about information, if you can get in at this zone, that's usually how you can make a lot of money. But that doesn't mean pour your life savings into this because obviously it could never reach mass adoption. Or maybe since EHang is the pioneer, it will burn out and be replaced by a new drone company, and that company is the one that reaches early majority and so on. Basically, I'm saying I still think we're in the very early days, but there is a chance that EHang becomes the MySpace of the drone industry. MySpace was a pioneer in social media, but it faded into the background as the other new kids on the block kind of took over the party? I don't know. Lastly, they also saw a $40 million investment from a European asset management firm through newly issued shares on January 30th. Now we look at the juicy financials and a really quick estimate of potential valuations. Looking at their balance sheet from their Q3 report, we'll focus on the far right column, which is in US dollars. We see that they have over $23 million in cash and $68.5 million in total current assets, meaning they can pay off all of their current liabilities with just the cash on hand they have, and their current assets alone are over double their total liabilities. Overall, I'm quite comfortable with this balance sheet. In terms of revenue, they saw record high revenue in Q3 2020, rising 104% year over year, and they witnessed gross margin expansion from 54.9% to 59.2%. But don't get too excited because those Q3 revenue numbers are in thousands of RMB, so it translates into roughly $10.5 million for Q3 revenue. They sold a total of 23 passenger grade AAVs in Q3 of 2020, so they still have a long way to go. Again, pointing to this point on the innovation graph from earlier. With that said, I want to address a really interesting part of their income statement from the past few years. We can see that total revenues have over doubled since the same quarter a year ago, yet sales and marketing expense has stayed relatively level compared to revenue growth. That disproportionate rise in revenue versus sales and marketing expense tells me that either these drones are spreading through word of mouth amongst government officials, or EHang barely has to advertise because the governments are already on board and now they just need to execute on regulations, plans, and manufacturing. Personally, I'm still trying to learn how to invest in disruptive innovation, but I believe this is another sign of catching it early. If there's a lot of revenue growth with not a lot of sales and marketing expense. In other words, the product is selling itself. And if we take a multi-year view, we realize this isn't just a fluke. Look at the top. EHang 5x'd revenues in the past 3 years, while their sales and marketing costs stayed pretty much flat. And this has led to a much nicer operating income over the years, going from a $19 million loss in 2017 to a $6 million loss in the past 12 months. This trajectory is why analysts expect revenues of 1.1 billion RMB by 2022, with profitability in the next year or two. But personally, I think in order for us to properly value this stock at today's valuation or justify even buying it here, you have to look much further than 2022. I mean, if you think about it, 2022 is still when AMULET is taking place, that massive demonstration across Spain, the UK, and the Netherlands. And this leads us to a little napkin math valuation, which I actually share with my patrons in a top tier patron only video just a few days ago. If we take another look at this chart that I told you to remember, the TAM projections by Morgan Stanley says that by 2030, the UAM market should be worth around $300 billion, maybe even a little more. If EHang can capture just 1.5% of that market, which is really not that much, that's $4.5 billion in annual sales. Slap on a price to sales ratio of 8. This is kind of a guess, but I'm assuming the company will be a bit more mature with lower but still very high growth rates in 2030. The market probably won't be as overpriced as it is today, and Chinese stocks are usually heavily discounted. So if you do 8 times 4.5 billion in sales, that's a $36 billion market cap for the company, which is almost exactly an 8x from today's prices. And you can even play around with those numbers. Say they get 1% or 3% market share of 300 billion, and say they have a PS ratio of 5, 10, 12, anything you want, and just make your own projections. So if you have a 10-year time horizon, if you have really high conviction, if EHang can continue to deliver and maintain market dominance, and if you are actually willing to hold a stock for that long, this could be a cheap valuation today. At the same time, this company looks insanely expensive for the next 1, maybe 2 years if you're using last year's revenue, next year's revenue, and considering they don't have earnings yet. It also just had a massive run up, but we are seeing some consolidation. Personally, I'm looking for some support. Again, that's because I literally plan to hold this for the next 10 years. Unless there's a fundamental change to the company for the worse, come back 10 years from now and ask to see my shares. I dare you. I'm just kidding. With that said, I am probably not going to put more than 4 to 5% of my portfolio into the cost basis of this stock. However, I will let it rise to more than 4 or 5% if it appreciates in price, and I probably will not trim it. I'm just going to let it run. But I'm basically saying I'm putting 4 to 5% of my portfolio on the line if it goes to zero. All right, so what are the risky risks involved with this investment? I see 4 main ones. Number 1, China. Chinese stocks are often discounted for many reasons, and one of the main concerns, at least from retail investors' side of things, is that their numbers cannot be trusted. Personally, I don't subscribe to that belief. I'll believe the numbers until proven otherwise, but there is one thing that's a little odd. While they do report annual reports, they do not report quarterly earnings with the SEC, which is obviously a tad sketchy. But according to this article by the SEC called Disclosure Considerations for China-Based Issuers, which is for companies based in China or with the majority of their operations in the People's Republic of China, they are exempt from reporting quarterly reports. And they do, of course, have a 20F, which is the equivalent of a 10K or annual report, and that is with the SEC. And again, they do post quarterly reports, just not filed through the SEC. Second risk, passenger drones and drones in general are kind of loud. This is more of an adoption risk. A Pew Research study showed 11% of people support drones, 34% favor limits and regulations, and 54%, the majority, disapprove. But right now, passenger drones only make up about 3 billion of EHang's estimated 2023 $130 billion market opportunity. So basically, their passenger drones aren't a huge portion of their revenue right now. And even if they were, to be quite honest, if China wanted passenger drones, they're going to have passenger drones. The United States, on the other hand, it might be a lot harder to get the regulation. Concern number 3 is safety. One bird could literally end this company's career. But in all seriousness, the passenger drones in particular have a multitude of safety precautions, including hardware redundancy, multiple systems, double communication assurance, and state-of-the-art command control centers to monitor every drone in flight. And finally, the 4th concern is another adoptability concern. It's logistics. They will have e-ports, which is like a parking garage for passenger AAVs, but does that mean I have to drive to the port, get in the drone, then when I land at the next port, I have to hope my location is close enough to be walking distance? Honestly, at that point, I might just consider driving. So in summation, this is a very speculative play and not for the lack of DD. Usually when people say it's speculative, it just means they didn't do enough research. But in this case, EHang is literally the definition of speculative. Another one of my speculative positions was Virgin Galactic. We're up over 200% on that one, so that one's gone pretty well. Personally, I'd only invest in this one if you're really looking for a new stock, you have some speculative money in your portfolio, and you really believe in the future. But none of this is financial advice. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace. And thank you. The Patreon is open now.